QuickBooks Enterprise 2021. Two businesses and personal bookkeeping in one QuickBooks file using classes, bills, accounts payable, and classes. It's time to boldly account where no account has accounted before with QuickBooks Enterprise 2021. Here we are in our practice file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. In prior presentations, we set up our practice file. We set up the classes within it to break out our data, breaking it out between two businesses or two different locations and personal data in one QuickBooks file. We've been focusing in lately on the vendors section, the prior few presentations, continuing to do so in this presentation, which you can also think of as the accounts payable section or the expenses section. In prior presentations, we focused in on writing checks, which would be decreasing the checking account. We would use the check form, even if it was like an electronic payment, or if you had bank fees, then the check form would be what would be used for the decreases to the checking account. And we talked about checks that could be written where the expense would have to be allocated or would then be allocated to one particular class, business one, business two, or personal, and those situations where we would have to allocate to multiple different classes with the one check. We have a similar situation when entering the bill. So now we're going to go up to the bill over here. The difference between the bill and the check is, of course, that the bill then will increase the accounts payable when we enter the bill. The other side go into the expense, if the expense is the other side that's being recorded. And then we will pay off the bill with the pay bill format, which will basically be the same thing as a check. This is like a check type of form that will be decreasing the checking account and decreasing the accounts payable. Now, one of the reasons we might want to enter the bills is because if we enter the bills when we receive the bills, then we can get the bills in our system at the point in time we receive them, which is usually better for an accrual method, and it's usually a good system to have because then you have your information in the system. Then you can pay the bills as the bills become paid, the bills become due, using this feature over here to manage the bills as they become due. So that can be a nice system to have. However, we still have the same kind of issue here with the bills. We could have bills that can be applied out directly or need to be applied out directly to business one, business two, or personal. And we might have some bills that we need to allocate between them. Now, the allocation on the bill side of things could be a little bit more complex when you think about the balance sheet, because the balance sheet is going to be increasing the accounts payable. So there's a couple different ways we might deal with the accounts payable. We have similar issues as we did when we thought about an invoice down here for the accounts receivable. So the accounts payable is a balance sheet account. We could use one accounts payable for all three of the bills that we're going to be entering into the system, and then we could break out the bills. Will simply be broken out by class as we enter them into the system in the accounts payable account, and that could work fine. However, if you have two different businesses that are utilizing the accounts payable a lot, and you want to break those two out so that you can sort them by the accounts payable in two different accounts, that could help you to sort, the vendors that are due for two different accounts. You can look at them separately rather than having them grouped together when you're paying the bills. Then you might want to set up two different accounts payable accounts. And that, of course, would be a little bit more complex to then manage between the two accounts, especially with those types of expenses that you're going to be allocating that you have to allocate to two different accounts, meaning one bill is going to be having an expense that should be allocated to two different accounts. The accounts payable side, if you have two accounts payable, will be a little bit more complex in that case. So I think many people, if you have small businesses that you're going to be running, it'll be sufficient to have one accounts payable, even though you might want, if you have a lot of customers on the business, most small businesses are looking more on the receivable side here and breaking out the receivables, and possibly might not need as much functionality on the payable side of things, and could be okay with one payable account. As the company gets bigger, then you might need the functionality of two payables. And obviously, if we have those situations where we have one company's doing like gig work or something like that, and the other company is more of a larger kind of business that you're doing a full service accounting process with, then it could be the case that one accounts payable would be fine, because the gig work kind of takes care of itself. You don't need another accounts payable account for it. You'd be okay with one accounts payable account. So we'll start out here entering data for one accounts payable account, assuming that will typically be okay for most businesses, and then possibly we'll go into setting up two accounts payable accounts in a future presentation to think about how that could work. So I'm going to go ahead and enter the bills. We're going to do a similar kind of process as with the checks, but now we're processing them through the bills. So if I go down here, same kind of concept. I'm going to go down to the expenses down below. And let's pick up some expenses here. So we're going to say advertising and promotion, probably something that once again can be tied to a particular company. So we're going to break those out between company, and I'm going to say this is the advertiser 1. So advertiser 1 was going to go to B1. So that looks good. Let's make the amount for 325. Date, let's make the date on 8, let's make it 07/25/21. And so I'm going to say okay. We have our advertising. So this is going to be increasing the bill, which is the accounts payable. That's what a bill means. The other side is going to be going to the advertising and promotion. It will then be breaking out by class of B1 on both the balance sheet and the income statement. Let's save it. Let's close it. Check it out. Saving it, closing it. Let's check it out by going to the reports drop down, company and financial. Take a look at that profit and loss by class, changing the dates up top from 01/01/21 to 12/31/21. And then we have our advertising up top. Within the advertising, drilling down on it, we have the item first we entered with a check, now entering with a bill. Other side of it is going to be on the balance sheet. So we're going to go to the reports drop down, company and financial. We're going to take a look at the balance sheet by class. Balance sheet by class. We're going to customize the report up top, changing the dates from 01/01/21 to 12/31/21 and okay. So there we have our accounts payable down here. So it's broken out in B1. We only have one account as opposed to the accounts receivable. But and now it's being broken out basically by class for that one account. So we'll talk about possibly two accounts, setting up two accounts in the future. If I go back to the home page, notice that if I wanted to like manage the bills, if I had a lot of bills that I'm entering, and I go into the pay bills here, then this is going to help us to manage the bills. So it's going to help us to sort the bills and manage the bills. So you can imagine if I had a lot of bills in here, then I can use this to basically sort the bills and manage them. Now, again, if I wanted to have the bills for the two different companies managed separately, then it might be easier for me to basically use two accounts payables. If I only have one of the companies that I really use the accounts payable for, and the other one I pay cash for, or I use bank feeds for, then one accounts payable is probably fine. If I don't have a lot of bills going on, then one accounts payable might be fine. And that's what we'll go with here. So before we enter the pay bill, let's enter another one. So let's say we had advertising for the second person. So advertising for B2 would, of course, then pull up B2's information. I'm going to say this is going to be 271. And this is going to be advertising, but it's going to be for the 7 series. And then I'm going to say there it is. And that pulls up the B2 class. So B2 class, I'm going to save it and close it. This is going to increase the accounts payable in putting it in the column of class 2 and increase, of course, the advertising that's in the account in the 7 series as well as in the column for B2. Let's go ahead and check it out. So we'll save it, close it, check it out. So now we got the advertising, but we're in the advertising for the 7 series numbers. So there they are. So double clicking on that. So there we have it. And there's the check first, there's the bill second. So that looks good. So I'm going to close this back out. On the balance sheet side of things, we only have the one account down here, but now we have it broken out between the two. If I look at the supporting schedule for this, reports drop down for the accounts payable, go down to the vendors and payable and take a look at the vendor balance detail, then it gives us those two items, kind of combined together. Even though they're accounts payable for different segments or different businesses, possibly, we got them combined together in the one report. So we would be dealing with them and paying them off kind of as if they're in one area here. Then we're going to go back into the home page. Let's enter another one. We're going to go into the bill here. and say, let's say we enter another, let's go by the vendors this time. So we had Amazon. So if we're buying like supplies, I think we bought from Amazon. So if I select that, populate the office supplies down here. We're going to say this is, let's say, 149 for the office supplies. And then once again, this will be increasing the, and notice that this is populating for us now. It's picking up the proper account because we assigned two different vendors, B1 and B2, so that we can assign the class so that it'll apply out both to the correct account on the expense side and the correct class. So this will then be increasing the accounts payable, go into the column of B1, and then increasing the office supplies and go into the proper account in the 6 series, as well as increasing the proper column, which will be the class of B1. Saving it and closing it. Let's check it out. Save it, close it. Check it out by going to the P&L. We're going to go on down to the supplies then. Supplies for the 6 series is going to be, where are the supplies on the 6 series? There they are, office supplies. I was just looking for supplies without the office here. So there's the bill, there's the check. Closing that back out. If we go back to the balance sheet by class, we then see the accounts payable. Double clicking on the accounts payable, we get the Amazon for the office supplies. Closing that back out, if we go back to the home page, to enter another one, we're going to go bill. Obviously, we could have office supplies for B2 now. So if I picked up Amazon B2, and that's where we get our office supplies, it populates to the 7 series automatically down here and to the proper class of B2. This is going to be, let's say, for 234. That's how much we paid. And this, of course, increasing now that the correct account of office supplies for the 7 series numbers go into the class 2, column 2 then. Accounts payable increasing, go into the class of column 2, B2. Saving it and closing it. Checking it out. Going to the profit and loss to do that. And then we're in the 7 series. Now office supplies, not just supplies, office supplies. So it's in the second column here. It's in the office supplies. So there we have it. Bill has been entered. And then we're going to go back up to the balance sheet. And we have the office supplies B2 here and office supplies. So there is the office supplies there as well. Closing that back out, let's go back on over to the home page. Let's enter a couple more bills. We're going to hit the drop down. So we had the bank and we had Costco. So Costco for the personal side of things. We might have a personal item. So Costco for personal, that then pulls up the proper accounts in the 8 series and the personal for 3. So I'm going to say this was 245 for Costco. So this is going to be increasing the proper account, the proper column, which is personal, and the accounts payable this time in the personal column. Saving it and closing it, saying okay. Checking it out by going to the this profit and loss. Let's go to the profit and loss first, and we're in the 8 series down here. So we're in the 8 series, and we went to Costco. So there's Costco, and there it is. So we had a check last time, bill this time. That looks good. And then going up to the balance sheet. Now we have our accounts payable on the personal side. Accounts payable personal side. Let's go back on over to the home page again and check out another one. Hitting the enter the bill, dropping it down. And then we had Costco. We have like dues for the business versus personal. I mean, for the 2 businesses. So we might have dues that we're paying. So we'll say dues. This is going to be for, let's say, $67 dues. It's going to the 6 series here. And the class is being allocated automatically. So it's going to go to the B1 class. It's going to go to the 6 series accounts because it's B1. It's going to increase the accounts payable, go into the proper class of B1, saving it and closing it. Let's check it out. To the dues. We're going to go to the profit and loss, to the dues. And this is going to be, there it is, right to the dues. And there we have it. So there's the check and the bill. So that looks good. And then if we go up to the balance sheet, then of course we have the bill in the balance sheet. The bill in the balance sheet for the dues. All right. And then if we go back into the home page and check it out again, if I go to the bills again, like if we go to the bills again, and then hit the drop down, or it rose up again, or actually I want to hit the vendor drop down. So dues, Edison, insurance, Outback. Let's do one more personal one here. If we go to Outback, then it's going to be, let's say we spent $237 here at the old steakhouse. It's going to the 8 series down below, which looks good. I don't know why it went to the second line there, probably because I was messing with the first line, but that's fine. So I'm going to say that this is going to be for the 237. So this is going to be increasing the accounts payable on the personal side, then on the income statement, increasing the 8 series account for the restaurants and putting it into the proper class of personal. So we'll save it, we'll close it, we'll check it out. Checking it out now. Profit and loss. In the 8 series, we're in the restaurants. And we went to the restaurant. It was a sit-down restaurant here for Outback. Sit-down restaurant, there it is. And then we're going to go to the balance sheet side of things. On the accounts payable, we have the personal. So double-clicking on the personal. And there we have Outback Steakhouse once again. So now let's think about the paying bill side of things. If I then go to the home page and we say, okay, let's sort some of these and pay them. If I go to the pay bills, now some of the problem here, of course, is now I've got all these items in there that are mixed up. I'm paying the bills now and looking and sorting them when I have items in here from multiple different, from the 3 different companies or 3 different classes, right? B1, B2, and B3. They're all going to be grouped together. So if that's not a problem, if you pay them all kind of together, then you're just looking at the due dates, then it may not be a problem. But if you want to look at them separately, then it may be a problem. And then you may want to like try to make 2 accounts payable accounts in that case. So that would be kind of the remedy of that account. So we can see, we can kind of sort them here by saying, look, these are B1 because I put a B1 by the vendor and a B2 and a personal and a P. So we can sort these to some degree here, but it could get kind of long if you have a lot of payables for the 3 businesses, and especially if you have 2 different people that are trying to sort the payables. If you have one business that's like gig work, you probably don't have a lot of payables for that one, and it's not a problem to have 1 accounts payable. Many companies are probably really concerned on the receivable side if they manage accounts receivable, and so they might be more concerned to have 2 accounts on the accounts receivable. On the payable side, they may be okay with 1 payable. So in any case, then when we pay these off, we can of course check them off as we pay them. I could say I'm going to pay the the advertising here. Let's pay the 2 advertising and one of the Amazons. We could sort these items by due date and whatnot, and go through our bill pages as we would for a normal type of company. The only difference here being that now we have bills that are kind of allocated to multiple different companies. When I pay this out, then it's going to then decrease the checking account. We're basically gonna make check type forms, and it's going to decrease the accounts payable side of things. So let's take a look at that. I'm going to go down here and say 725. That's good. Check. I'm going to assign the check number down below. We're going to be taking it out of then the checking account. So that looks good. So I'm going to say save it. Let's pay the selected bills, and then I'm going to let QuickBooks assign the numbers, or I could just call them E1. I'm going to say they're electronic checks. So I'll say E1, E2, and E3. So we'll say, okay, let's do that, and then check it out. So those have been recorded. That's good. Let's go back on up to the balance sheet now, and the accounts payable should have been decreased. So if I take a look at the accounts payable, I forgot which ones I paid. I think I paid some for B1 here. So here's the 2 bill payment forms that we have for those 2 items decreased in the accounts payable. If I double click on them, then you see the check form, which looks a little bit different on the bottom because this is indicating that it went out of the accounts payable instead of directly to an expense account or some other account. Closing this back out. So there we have that. It's going to the proper class, so it picked up the proper class when we paid off the payable. Here we have the bill for B2. Once again, even though we paid it out of the same kind of area, it was for 2 different basically classes, and it picked up the proper class and put the proper class in the proper column. closing that out. And it's also going to do that on the checking account side of things. Remember, we didn't make 3 checking accounts. We're dealing with 1 checking account, but it's kind of breaking out the activity that's happening between the 3 classes with that 1 checking account. So in other words, if I go into B1 here, we have the check payments that are decreasing on the cash side of things, closing this back out. And then over here on B2, we have the decrease for that activity that was for advertising for B2 that was paid for B2. So it's breaking out the cash side well, and as well as the accounts payable side well, both of these 2 sides only having 1 account. We didn't set up 3 different checking accounts. When we look at the checking account, we have 1 checking account that currently has $127,267 in it. We would reconcile 1 checking account, and so you could set up 3. It would be probably clean. It would be better bookkeeping wise to set up 3, but it would be a little bit more work to do so because you would have to reconcile 3 accounts. And the same with the accounts payable. We could set up another. We may look at that option in a future presentation. Now, you might have another situation. Well, what about those kind of expenses that need to be allocated between B1, B2, and B3? What are we going to do with those items? So if we have to enter that with a bill. So let's take a look at that. Like if I go to the home page here, and now I'm going to enter a bill. I'm going to say, okay, I'm going to enter a bill. And then let's say we do one for the auto repair shop. And that one we're allocating between these three categories. So now I'm going to say, okay, well, let's say we paid, let's say $500 to make this. And then I'm going to say, this is going to be, I think it was 500 times 0.5 we said it was. And then it was 500 times 0.3. And then 500 times 0.2. So now we've got our allocation of 3. These 3 accounts should be good on the expense side of things because now we're paying 500, or we're going to pay 500. We're increasing the accounts payable for 500 that we're going to pay in the future, allocating it out between the 6, 7, and 8, B1, B2, and B3 being the classes for those 3 accounts. And then on the bill side of things, that's the accounts payable. On the balance side of things, it should pick these 3 up and allocate this to the 3 different classes, even though we only have 1 payable that we're dealing with, right? So let's check that out. Let's go ahead and say save it and close it. Save it and close it. Check it out. Let's go to the balance sheet or let's go to the profit and loss here and just make sure that it broke these 3 out on the 3 autos. So we have auto here for the 6 series. So there's our bill. That looks good. And then if we go on down to the 7 series, here's the auto there in B2. So that looks good. Here's the bill. And then for the personal in the 8 series, we have the auto in the 8 series as well. Auto, and there it is. So, okay, that looks good. Let's go to the balance sheet. Balance sheet side of things. We're going to say then we have the accounts payable. Let's see if it broke out the auto between B1, B2, and B3. So here it is, auto for B1. Yeah, it did, the 250. And the auto for B2. Here we have there, and then the auto for the personal. So that looks good. It breaks it out nicely right there. And then when I make the deposit of that, or when I make the payment of that accounts payable from the checking account, it should, even though we're paying 1 bill, it should remove it from the 3 different classes here and then apply it to 3 different locations in the checking account. So let's take a look at that. We're going to go, okay, home page. And then we're going to say, let's say we pay the bill now for that auto. So we're going to pay the auto repair shop. Let's pay it. And that looks good. So let's go ahead and do that. And then I'm going to pay the selected bill. And I'm just going to call it, E7. And okay. And let's check it out. This transaction, that's fine. And then I'm going to say close this. Let's go back to the balance sheet, checking it out. Then we're going to say that the accounts payable went down if I select any of these items. So here it is, canceling each other out. There's the bill pay form for B1, for B2, and for B3. So that looks good. And then up top in the checking account, we have it going into the checking account for, B1 here. That looks good. and then B2. So B2 looks good, and then the personal. So it breaks it out. It's breaking it out nicely between those items as well. Now you could have the same kind of situation where you might not know what the percentage is again, and you might use another class, like to put it into the not classed column, and then go back in there and allocate it out. But it looks like the allocation is working. You know, it works well for the system in there, and everything balances out. So that's going to be the accounts payable. We might take a look in a future presentation, think about a situation where what if we wanted two separate accounts payables, and that could help us to basically manage our bills by location or by business.